today we're finally getting what I'm calling a much-needed pullback in Marriott Vacations Worldwide, symbol VAC, the Cramer fave vacation rental business that was spun off by Marriott International back in 2011. Here's a stock that's been totally on fire since we highlighted a little over a month ago, including a phenomenal run in the wake of the company's latest quarter reported just last week. How strong were these results? Marriott Vacations delivered a 9-cent earnings beat off a $1.74 basis, even as the revenue some people felt came in a little bit light, but that was because of the fallout from Hurricane Matthew. More important, though, management gave fabulous guidance for 2017, forecasting 9 to 15% contract sales growth this year. That's the all-important key metric that you have to look at in the timeshare business. And if the economy can keep accelerating here, I think the estimates going forward could turn out to be too conservative. My judgment, which means the stock might have a lot more room to run. So don't take it from me. Let's check in with Steve Weisz. He's the president and CEO of Marriott Vacations Worldwide. Hear more about the quarter and what's next for his company. Mr. Weisz, welcome back to Mad Money. Good to see you, sir. Have a seat.
Great to be here.
All right. When we talked, the stock was, I don't know, 50s, 60s.
Yep.
And I couldn't figure it out. And people were telling me it's because Airbnb is going to destroy Marriott Vacations Worldwide. Right. But they didn't, did they?
No, they certainly didn't.
And tell me how does a stock go like this? I think a lot of it is because you had some one-time things, but you said that things were going to get better, and you did exactly what your roadmap was.
Well, exactly right. Even back in 2015, we had an analyst day in New York. We told people that our plan was we were going to add new sales centers in new resort locations, and we were going to have new marketing programs that delivered more tours into our existing sales centers. And in fact, that all happened. It's kind of nice when a plan works out.
Well, but let's talk about you. There's a term that you use in your documents. It's called tour flow.
Correct.
And I want to know how important tour flow is.
Well, it's very important because a timeshare is it's not a sought good, it's a sold good.
Okay.
People don't wake up in the morning saying, hey, I think I'll go buy some timeshare.
Right.
Existing owners do, but new owners don't.
Okay.
So what you have to do is you have to schedule presentation opportunities with new customers to come in. You present the opportunity to them. You try to understand their vacationing needs. And when all that happens, then you turn around and hopefully you're able to make a sale. So you have to have tour flow in order to get sales. Okay,
so you've opened these centers, the 6th plus the 7th in New York. Now, tell me how are they doing? And particularly I'm interested in Miami. Like, what's it like if I went down to the Miami sales center?
Well, Miami it's very interesting. It opened the last week of December of last year, so we have a very short run time on it. I think you'd find it's a great facility, and so far the indications are good. We have good tour flow. We have good closing rates. Closing rate being another important thing in the business, which what percentage of the people that tour actually buy.
Oh, okay.
And then so we've got that. We had a sales center that opened in Washington, D.C. That opened in, call it, April of last year. We had a small sales center open in New York City, which we've now have added a second sales center in New York City, about 2 blocks away, which is about 11,000 square feet. Ooh. And so that's doing very nicely. We're very pleased. We had a new sales center open in Surfers Paradise in Australia.
Right, I wanted to ask you, because I saw the Asian number. There's a huge jump.
50% last year.
Well, that's pretty fabulous. I mean, could that be the beginning of something much bigger?
Well, we think Asia is a great opportunity for our company. Now, I'll admit to you, 50% increase, sometimes it's a
low base. I understand that, but
small
it
numbers.
Matter. Now, the one thing that caught my eye, I'm trying to get is that you have a very asset-light model, so to speak. I mean, so you generate a lot of cash.
Correct.
And I was trying to figure out what the best use of your cash is, given the fact that, we also may have a change in the tax code. It just seems like this might be your time to be able to do a lot of different things with that cash.
Well, clearly, I mean, as in all businesses, you use your cash to grow your business.
Right.
If you fed all those needs, and the way we do that is through an asset-light model, a capital-efficient model, where we actually work with other parties to be able to kind of grow resorts, et cetera, or do things on a turnkey basis where we're not putting a lot of capital out front. We do it as the inventory comes to us.
Love that model.
I mean, since we spun off, it's been 5 years, we've generated just shy of $1 billion of free cash flow, and we've returned $700 million to our shareholders.
Wow.
So it's, between buying back shares of stock, we bought back just about 27% of our shares of stock.
Well, you said that when it went down there, when we saw you, you said, look, we're buying. You said it. You said, we're going to buy this stock. And that's exactly what you did.
Absolutely right.
Now, what could you just give me, how economically sensitive are you? Because, we're getting the sense that people are a little bit more willing to put some cash down. Would it be, would a timeshare be one of the things that they would put the cash down on?
Well, clearly it's not for everybody.
Okay.
Think about it as prepaying your vacations, right?
All right.
And people that are, clearly there's a tight correlation between closing rates and what people feel about consumer confidence.
Okay.
Is that consumer confidence number goes up, as we've seen it go up very nicely in the last several months, then closing rates start to come up with it, only because people are feeling more comfortable about making commitments. Let's face it, it's not a small commitment. You're talking about a $30,000 commitment on a discretionary purchase, but generally speaking, people are much more comfortable as the economy gets better.
Well, I want to congratulate you. Very few guests come on are more adamant that their stock is mispriced. Very few are as adamant as you were, and boy, were you ever right. That's Steve Weisz, President and CEO of Marriott Vacations Worldwide. You should look at this company. It's got great cash flow, and it's returning a lot to its shareholder. Mad Money is back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.